time now for a fundamental check on the equity markets. Joining us on the show is Mr. G. Chokkalingam, who's Executive Director and Chief Investment Officer at Centrum Wealth Management. Now, Chokkalingam, to begin with, there was this huge optimism that was playing out across the equity markets. You had a number of people coming in on this show and on various other channels saying that, they're pegging targets of 22,000, 23,000 on the Sensex. We're nowhere near that, and we continue to remain in consolidation mode. Over the next 2 weeks, what should we expect the equity markets will trade like?
Certainly, next 2 weeks as well as next 2-3 months, we are still remain very optimistic. The market should see significant rise. Most probably, the rate cut should happen tomorrow because the inflation has touched a 10-month low. And despite having very high inflation for last 3 calendar years, the manufacturing inflation is still around 5%. That also gives a lot of comfort on a rate cut front. And many industrial houses are highly leveraged, so they badly need some relief to turn around the business. So the trigger should come most probably tomorrow. In case RBI fails to cut the rate, repo rate, at least they should be more flexible on CRR. Either way, that would be liked by the market. That should be followed by December quarter results. In fact, CMI has projected a 26% year-on-year profit growth. That's also our view, and we also firmly believe that October-December results will be significantly better than the previous 3-4 quarters. It should be marginally better than the September quarter as well, and that also should give good support. And after that, we see a lot of scope for FDI to materialize in both retail and aviation sector. Apart from these 3 triggers, I firmly believe that the government, the way they have been doing for last couple of months, they would definitely accelerate the investment, perhaps with the help of the PSUs. So all this would play out. I don't see any risk factor except the monsoon forecast, which would come sometime in April, May, because India cannot afford to have failure of a monsoon consequently for 2 times. So otherwise, I don't see any risk at all, and the valuations are still attractive. Our Sensex, if you see the consensus EPS, that is still quoting below 14, which is at the lower end of the last 5 to 10 years range.
Sure. And what would your sectoral preference be? Because of late you've got the metals pack, which has been garnering a lot of attention. Most of the brokerages believe that you will see a recovery in the next second half of the year, driven by stable steel prices.
I firmly believe that the metal sector will still have problems because across the world the economies are correcting downwards. So I think we are reacting too optimistic way, whereas the reality is that they will definitely have problems. I would still remain optimistic on private banks and select capital good names and FMCG, and also retail stocks, and also select aviation stocks. Apart from the sector approach, I would still advise investors to go for individual stock ideas, because till March end, our expectation is that at best market can go up by about 10%, crossing 21,000 Sensex, and therefore there is a limited upside for the market in the short term, whereas there is a lot of potential for individual stocks to outperform. So therefore, I would suggest going for individual stock ideas within the mid-cap space.
Which ones would they be? Can you get my audio, Chokkalingam, asking which are the individual stock ideas that you're bullish on?
Certainly. There are many. I would, based on the recent run-up in the price or correction in the price, I would strongly recommend State Bank of Bikaner. It's available below September book value, adjusted book value. It's also a good dividend yield company. It's a PSU bank, and it has posted a very good profit growth.